Honest community, before we dive into this episode, we've got a quick free favour to ask. If you enjoyed the Honest Property podcast, please hit like, follow and subscribe wherever you're listening from. It helps us grow, reach more people and bring on guests that you want to hear from. Thanks for being a part of this. We appreciate you more than you know.
Hello and welcome to the Honest Property podcast with your hosts Becky and Ruth, and we like to talk all things investing, property, holistic business. And today we have on the podcast Jessica Mortgages. She's a mother, she's a mortgage broker, an ethical investor, and she is someone that really helps landlords, first-time buyers navigate the property space. So welcome, Jessica. It's so lovely to have you on.
Hi ladies, how are you?
Oh good. So we've actually already been like having a great chin wag before we started recording, and Jessica mentioned that she's just completed. A notification popped up saying that she's just completed on a property. So congratulations, Jessica.
Yes.
So we'd love to know how you got started, because you're an investor yourself.
Yeah.
And you've been investing in property for a long time. And we've always said the reason why we gravitated to our mortgage broker, a big lesson that we learned from taking a course was that listen to people who already invest, who already are years ahead, and yours. Well, you tick all the boxes. You're a mortgage broker and you invest. You're the most qualified person to go to. So how did you get started?
So my dad was a property, I would say, guru, because he was like doing HMOs like 30 years ago when they weren't even invented, when it wasn't even a strategy. And so really I learned from him, so to speak. Most families have family time where they go for walks. We didn't. We went tiling. And we used to have games between me and my sister of putting as many, what are them peg things called for tiles? I don't even know what they are. They look like a T.
Yeah,
and you'd do a race with us who could put the most in. And literally we would do that with him, and we would spend time doing things like that, like all property related, going to the builder's merchant, and it was very work orientated, our lifestyle.
I love that from a young age.
Yeah, definitely.
And then Ruth told me that you invest with your sister as well, is that right?
Yeah, so we did. Unfortunately, my father passed away in 2010, and me and my sister, we took the portfolio over. Well, we got our share, and then we took the portfolio. We started with, I think it was 8, something like that, and then we worked together. We had a shop, and we bought more properties from the shop, and we split our portfolio about 2018, and then I decided to go alone. And the portfolio was about 15 then, and literally from then I thought to myself, I don't really want to do anything else. I want to work. So I've always worked as well. I've always had an income there on the background and never used my properties to live off. And I just thought to myself, I want to do this as a going concern, in the sense I want to really put my whole heart into this now. Carried on working, but I reduced my hours to part-time. And then I literally started to build it with my husband, and we are now at 25 properties from 15.
That's
so
amazing.
I mean, it took us 5 years to get them 10. It's not what I would say to everybody out there. Property is a long game. It's not a quick, get rich quick. So, unless you're doing some flips, but you're going to get taxed on them flips. Do you know what I mean?
Yeah, we totally agree. We agree that it's a long game, and in all reality, I mean, you have a lot more to say about the market now, but with what the market looks like now, you're not. If you want a less stress approach to property, and you're just going to do buy to lets, and you're not going to run like a property business, like a service accommodation or an HMO,
Yes.
they're not going to cash flow you very much for you to live on now.
Mm.
But we do agree that in holding them for a long period of time is what is why like business and property complement each other
Yes.
so well. And what you've done by you have a business in property, which means you have direct access to great, like you can see what the loans are going to be, what the rates are firsthand.
Yeah.
Is that why you got into mortgage, into what you do now?
Right. So I previously, when my dad was alive, I was his bank manager. So I've always worked in banking. So that we had one sister as a solicitor and the other one was a banker. So
That's so
literally, yeah. So when he passed away, obviously that kind of halted, and I put that career on hold while I ran the other business. And then I don't know, it was like in 2020, me and my husband had a chat, and he said, "What do you want to do?" And I says, "I want to go back to my first love." And he said, "What's your first love?" And I said, "Mortgages." He was like, "Really?" Because as a mortgage broker, you are creating dreams, whether you're doing someone's first house or their first move, or even they're buying a new house to live in, or even a buy to let portfolio. This You are a dream maker. Sounds cheesy, I know, but it's so true.
I think that is one thing we hear from other brokers, is that it's so fulfilling knowing
Mm,
that you have helped somebody with that stage of life. But I love that perspective on knowing that the business that you do is to serve and to help other people.
mm,
That's when I think, every like the karma comes back round to you when
Mm.
100%.
you're operating from a like a more heart-led space.
I'd love to ask though, on a personal note, if that's
Yeah,
okay for me,
yeah,
because Becky and I, we've always invested together, and I'd
mm,
love to actually know why you and your sister decided to split ways. Is it
yeah.
because she was also focusing on her career?
I think when you no offense, but when you work with your sister and we did things for a long time and we've grown up together and we are like twins. Like a lot of the audience won't know my sister because she's very not on social media very much. But she's just messaging me now. um we've had a
Never
new
talk.
nephew in their family and she's had a new baby, so we're all like all babied up. So basically with me and Sarah, look, we really get on. That love is there, but it's just business wise we just had different visions, and rather than letting it affect our personal relationship, I wanted to grow the business in a different way and she wanted to do other things. Her main focus, because she was a partner in a firm, she wanted to more do that, and I wanted to then do more of the buy to let stuff. So it was just a natural progression to then decide, well, we've done this. I think it was 12 years by the time we split, and then 12 years is a long time, and you change as a person, and it was a time where we both wanted to see what was ours, and to be honest with you, I think it's helped me because I was always the big sister, but acted like the baby sister. And it's actually enabled me to change my mindset to grow as a person because I think I fell a bit in someone's shadow because I always used to second guess my thoughts. I mean, even yesterday, I had something happen in my personal stuff to do with my girls' school, and normally I would have rang her and like gone through it all with her. But I just thought, no, I don't need to because I know the answer. I know what is right. So I carried on and sent the email and whatever. And I just thought that is growth in itself, that I don't need to
Yeah.
hold on to the crutch. And I think what was happening is with working with my sister, I was leaning onto her and I didn't need to. Um, and the fact that I'm doing it on my own now, like I was saying to you ladies, I've got a VA who manages my portfolio, and I've got an admin support for the mortgages. So you just need people. You do need to outsource when you're going to grow a portfolio, and yeah, pretty much.
Oh, that's so. I think that is a really interesting point from a spiritual perspective, actually, because there is something to be said about it's kind of it is important to find the balance between having your support network there or having your family and your go-to people, but not being overly dependent on each other.
Mm,
um Ruth and I are very, very close, but we do definitely have to be very careful about making sure that we're still able to
mm.
operate independently and make independent decisions with our lives. But it can be easily blended, can't
Yeah, it can be
it?
easily blended. Like we have very different. Well, right now, I'd say that we are still on the same page with the vision of our property.
I think my sister and I still got the vision that we both want to grow. But I just think with regards to, I've got kids, she's got kids, and like, I don't know, it's just easier if we know it's all boxed off. Like, you start thinking about death and what's going to happen then. And
I mean,
I'm
you
a bit
had a
older
death
than
in
you.
the family as well, and I mean, of
Yeah,
course,
yeah.
like
So
you
you
just think
start
about
thinking
that.
about it.
And I think you
Like,
can't pretend as well that, when
mm,
you have your partners as well, you've got to think
yeah,
about your also extended family, and just making
yes,
sure is what we're doing to what we've built together, is that still on the same page?
yes.
Um, um,
And make sure that it suits. I mean,
so,
I still feel like ultimately our properties, our portfolio together is meant to create recurring income so that we can pursue whatever
Mm.
our separate things are. Do you still own them together with your sister?
No, no, we split
oh,
everything. We fully
Everything.
split everything.
Oh, okay, that's interesting. Because I was
Yeah.
thinking, well, from our perspective, it would be like they would just still be
It's
running.
just easier because obviously, how do I put this? If I want to then go buy something, like this morning, I've had a nice chat with someone because we used to have commercial together as well, and I want to get back in that space because I've been to MIPIN, I went to Cannes, and I've done quite a few commercial cases, and this is a bit of a sweet spot for me at the moment because the commercial at Resi is lovely. Provides income. I was speaking to Hayley Andrews yesterday, and she was telling us a bit about that she's doing a museum and she's doing all these other things, and it's just interesting to hear all these other different kind of strategies you can do. And I just think sometimes if you're doing it on your own, maybe it sometimes can be easier. Yeah, I don't know. I
Yeah,
don't know.
whatever works for you. I think it's everything every there's a phase and an era for everything.
Yeah. And
mm,
yeah, and I think, before in my 30s, I used to think I'm always going to be in the same, when we got the shop and it was doing really well, I just used to think we're going to do this forever. I don't know why. Because my dad did it. So I just thought to myself, but I now have realised and I've opened my self up to the fact that things are in 5 or 10 year blocks or
Mm,
even 2 year blocks. And it's not actually bad. Change is not actually bad. Change is actually good. Um, and we're going to talk about something spiritual now. And I do think if things don't happen for you, whether it's a purchase of a property or if a situation doesn't happen for you, it wasn't serving you, and
mm.
there's normally a better situation waiting for you or a better door to go through.
Yeah, 100%. 100. We've been experiencing that all last year. So we've tried these doors, and I'm glad we've shut them back.
Yeah, no, totally. Don't you think? Don't you think?
Yeah.
100%.
So you've also did you get an award for being an ethical investor? How what does that?
Yes. No, I didn't get the award. I got nominated,
Oh,
but
nominated. So what
and I
does it?
was nominated, but I've been nominated for Mumpreneur of the Year this
Oh,
next month, and I've been nominated for New Small Business. Yeah, I mean, look, it's really good being nominated. I have won awards before. I was top advisor in, the banking world, and then we won the top store, me and my sister, in the whole UK. But sometimes awards and accolades are not everything. Sometimes it's how you feel inside, and does it all align with me? And yeah, and I just think sometimes things are good for the time being, and we shouldn't just. I do think we shouldn't be just complacent. And we should always trying to be the best version of ourselves every day. I sound so cheesy, but it's so true
I
because
feel
I
like from
say
everything that you're sorry, just to say that from everything that you're saying, I feel like you have lived so much life experience and you don't look
yes.
old. You look like you've just like you're so youthful, yet
Oh no, I'm
you're
not.
you sound like you've gone well, you do. I mean your skin looks gorgeous,
Yeah,
but
amazing. Thank you.
you just sound like you've gone through so many different
Yeah.
lives within such a short space of time. And do you feel like that's really maybe opened you up more into just, I guess,
Yeah.
like but like you just said, like the awards and like the recognition in that way, like it doesn't fulfill something completely
Yeah.
there. So what does your life look like now from 5 years ago in
Yeah, I actually, it's so funny. I always get you guys mixed up, Ruth or Rebecca. Which one's Ruth? Which one's Rebecca? I always get you.
Ruth?
Ruth, right. So Ruth, what I was going to say is last night I was just thinking this because I was cheeky. I went to an event in Manchester and I'm terrible. I hate trains from Leeds to Manchester. They just frustrate me. So I just got an Uber. And to be honest with you, it was like £5 difference. And it was literally to my door. I've like got a driver, haven't I? And I
Yeah.
was just sat there and I've done all my work. I did it on the way in the Uber to the event. And I was just sat there scrolling and I just thought, and then I don't know, my phone told me, showed me some pictures from 5 years ago. And I was like, wow, haven't I changed? One, how I look. Two, wow, these were my thoughts then, because you know from pictures you can see what you were thinking about, what you were doing. And I just thought, really, I should be pinching myself, where I am now. But instead, what we do is we set new goals and new aspirations, and then we're like, when can I get to that? Then I've made it. And then you set it again and you're like, when is this gonna end? um but yeah, I just think I think I don't think I've lived through that much bad experience, but I think losing a parent is massive, and also growing a portfolio, um from such a small amount to a bigger amount, and dealing with the kind of customers I deal with as well. So they are on the um let's just say the more social housing um tenants, so they have different kind of issues. And yeah, I mean, like I've had three cannabis grows, three murdered tenants, um burglaries, what else? Your face. Let me think, what else have I had? Midnight flits, and I'm still smiling, and I'm still investing.
What's
Midnight
that?
flits,
What's
so where they pack their stuff up and they just vanish,
Oh, oh,
or they
midnight.
leave me
Oh,
with the
right.
dirty
Okay.
nappies.
Yeah.
Oh, I was like,
Okay.
maybe that's a Leeds term. I don't know that.
I
Maybe
thought
it is
I thought that was
midnight
like a
flips.
type of drug. I was like,
No, 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 I'm too good. No, I don't do stuff like that. Yeah, so but I think this all makes you a better and a resilient person. Even like from previous jobs I've had and employers that I've worked for, and then that it didn't align with me. And I think all these things are what leads you to becoming the person you become. And sometimes we go, I wish that didn't happen to me, I wish that didn't happen to me. But actually, you should want these difficult times, because the difficult times make you the person you become.
yeah,
I know you hate it
yeah.
when you're in it, though.
You do, and the tears flow. The tears do flow.
Mm.
I mean, like last night, I was at that event last night, and 3 years ago, I came out on social media, and I popped my cherry and came out on social media. I was like, wow, I'm here. But then I was looking at my pictures in the car, and I was like, wow, 3 years ago, I wasn't even doing any mortgages, and today I've had, a HMO in London complete, and it's massive. It's got development finance of 150 grand and purchase price of 585, and NGDV will be 1.2 million. I don't think I knew what GDV was 3 years ago. Do you know what I mean?
No way. That's amazing.
So
Hey guys, if you're new to property investing, we know exactly how hard it is to figure out where to start. That's why we created the Beginner's Roadmap. It's your guide to mastering the fundamentals so that you can move forward with clarity and confidence. Plus, you'll gain access to our free community for ongoing support. Just hit the link in the show notes. Now, let's jump back into this episode.
yeah, it's all growth. And as long as, and I do think sometimes on social media we see a lot of people doing amazing things and driving these flash cars and dressing a certain way, and we just all need to take it with a pinch of salt, because the chances are they're probably not doing that.
Yeah,
Yeah.
yeah.
Yeah, yeah. Oh, yeah. I mean, that's why the Honest Property Sisters was born, because we were like, let's just be real. Let's be real.
Yeah, 100%, definitely. Yeah, there's a lot of and there's a lot of stuff out there as well that people don't talk about. So I do say this to people, but I'll say it to you. Sometimes this is a bit controversial. This is not a broker head. This is a landlord head. Just to put that out there. Sometimes a deal doesn't stack. So if your deal doesn't stack, it's not the end of the world.
Yeah.
Don't start crying. Yeah. Because deals that don't stack will stack at one point, and they will stack probably in the future. So
Mm.
it's just knowing your area where you want to invest in and making it clear in your mind what you want to achieve. So for me, I've completed on them 2 purchases this week. Them deals don't stack. But I'm buying it because of the area I'm buying them in, and I know that I have a get out of jail card in the sense I can be able to sell them very quickly. I know people are. It's an area that's sought after. Um, I know that the deal doesn't stack right now, but it will in 5 years,
Yeah.
and it will bring me income. So it won't give me capital growth at the moment. In 5 to 10 years, it will do, but it'll give me the regular income every month,
Yeah, I think like
cash flow.
especially when it comes to property, like you just said before, I don't know if you said it before we came onto the podcast, but
Yeah.
Jessica was saying that, you know, property is a long-term game. And if you can see what it's going to look like in 5, 10 years, like, yes, okay, maybe it might not, the capital will need time to grow, but if you will have to figure out multiple exit strategies if it doesn't work. And
Mm.
like you said, you bought it anyway, but it's not like you did it on a whim. You did your research. I mean, really helps that you're a mortgage broker um,
Yeah.
and trained. but
Oh,
mm, but I
I
just
mean,
think,
like, so we're talking about rates and stuff. Let's just have a chat about that. I mean,
oh yeah,
rates
go ahead.
as a broker, I can get really good rates, and we as a firm as well. We've got a preferential rate with a new lender that's just launched that no other brokerage has got. There's only 7 brokerages in the whole UK that have got this rate, and it is literally a 2.79 rate. No one's got that at the moment, and yet they're a brilliant new bank, and no one knows who they are. And you only get to know who they are by using me.
Yeah, it's exclusive in the
Yeah.
club.
The
only way
I love it. I love it.
2.79 through
I'd love to
Jessica.
actually ask you as well, like
Mm,
what do you see from I guess like
mm,
dealing with property deals every single day and people and trying to meet their expectations.
mm.
Where do you see in the next 5 years with like especially the UK economy?
Yeah.
What's it looking now like for landlords wanting to buy their first investment property or even a first time buyer? Like
Mm.
what's your advice and what can is there any predictions that
Yeah.
you think is
Crystal
happening?
ball.
Yeah.
Crystal ball. Look, what I would say to everybody out there, look, this no money down deal. Yeah, you might get a mortgage of 95% for a first time buyer. You probably could do that. I've just done a first time buyer's mortgage just this morning. What I would say is there's 2 schools of thought. The government does support first time buyers and home movers in the sense you'll tend to find the rates are a little bit more, the product fees are a lot less from the lender because the government supports that. So you'll tend to find product fees on resi stuff is a lot more reasonable, and where you're looking at maybe 1,000, 1,500 from the lender. Yeah. But on the buy to let, it can be up to 6% product fees. And if you're doing a big loan like that loan that I was just discussing, the 585 one, that can be a hefty sum. Yeah.
Mm.
And unfortunately, I'm not a tax advisor, just to put this out there, but unfortunately, from the 1st of April, the government is changing the parameters. Um, and things are getting more difficult, but I do think if you've got that burning desire inside, and if you can, I don't know, pool the people around you, family to help you on that journey, why not? Why
Yeah.
not? And I
Yeah.
do think, look, this is my own thought, not as a broker, not I do think everybody should have the right to buy a property, and that should be, in the forefront. And why shouldn't we own a piece of this pie? Why should we, let the big conglomerates own all the properties? Why should we do that? Why can't the little people have a go as well?
Yeah, why couldn't you buy a property and if you wanted to rent it out, you
Mm,
should you to be able to have that choice
yeah.
um instead of
I
just
mean, look, I'll give you an example, Ruth. I bought a property in 2010. Yeah. I bought it for I think it was 55,000. It's now worth 130,000. I
Yeah.
mean, it was only a 2-bed terrace, but we're an island, and on an island that is struggling for housing, the properties go up. Normally, rule of thumb is every 10 years it's double, but something like a terraced house, it might not be double, it might be slightly less. Yeah. But that's why I'm saying to everybody, if you put that money, I can't comment about Bitcoin and all the other stuff because I don't really do that. But I do know bricks and mortar never lies. You put something into something like that, an asset, you've got an asset that you can see. Um, and, like a lot of customers, when I come across, they have credit cards, loans, things like that. A lot of the banks don't like this because it's unstructured borrowing.
Yeah.
Whereas if you had something like 12 mortgages, it's structured, it's against an asset. They know that they're going to get their money back if things go wrong.
Yeah,
Yeah,
completely agree.
yeah.
Completely agree. I
We
think
we agree with that.
if just even having one, if
Mm,
everyone had one property at least, like we completely advocate for that because that you just see firsthand even
the
like
growth.
yeah, the growth, the boomer generation.
Mm.
If I do like this is quite controversial, but I do
Yes.
maybe
It's the Honest
well, as the
Property
honest prophecy, so I'm going to say it.
podcast.
Yeah, you just see the difference between people who have held on to their properties um, for a long period of time and then reached
Mm,
retirement age, how much they've benefited compared to those who haven't. And if everybody was able to even just have one property
yeah.
now, come retirement age, there wouldn't be the same level of pressure that a lot of people are
Mm.
experiencing um, now.
It's
And that's
just
the most basic, like that's the most simple and basic way to invest, even if it is your own home.
100%. I just think honestly, that's part of the reason why I wanted to do this again. I wanted to become a broker. It was always a dream of mine, and then when I passed all the exams, it was like woo! And it's been so lovely, and the people I meet on the journey, it's brilliant. And I just think, why shouldn't everybody own a property? Why shouldn't they? Why should, I mean, I'll give you an example. I've done more because I'm a specialist broker. I've done mortgages for people who've missed payments 6 months of their mortgage, and I got their mortgage through. Um, and then I've got also another lady. She was on benefits. I got her a mortgage. Do you know what I mean? So I am really a broker who can go up to a very vast amount of lenders. And yeah, and it's just always a can-do approach. Always be can-do.
Before we continue, here's a quick thought. Ever feel like there's just never enough time to focus on what really matters in your business? You don't have to do it all alone. As they say, a great team makes everything easier. That's why we've partnered with the Freedom Geek. Their talented Filipino VAs help us with tasks like admin and podcast editing, just like for this episode, giving us the freedom to focus on what really moves the needle. If you're looking to reclaim your time and to work smarter, then check out the Freedom Geek. All the details are in the show notes. Now let's get back to our conversation.
Yeah, I think people's the general knowledge about mortgages is so limited, and
Mm,
it's nice, it's so great that you're on this podcast to share with everybody that
mm.
there's a mortgage for nearly everyone. You
Yeah.
just need to talk to Jess and
Bless
just
you.
see what's available for you. Like a lot of people used to think,
Yeah.
oh, from our perspective, we've always been self-employed. Oh,
Mm.
how can I get a mortgage as a freelancer, as a self-employed person? Yes, you can. You can.
It's
Needless
really
to
easy.
say.
Yeah.
But
Well,
people
it's
do
not really easy, but there's
that.
there's there's lenders that are specific for you guys.
Yeah, because
Um.
we never owned our own home.
Okay.
We started buying
Property.
investments before we even moved out. So
Yeah.
um so it was crazy. Like we've held on to our properties for over 10 years now, and
Wow.
we've already seen that double. And it just we find that like it's like magic, just like the compound is just magic. But I would
Yes.
say actually as well that what about people, we definitely see it with like the millennial generation who say who are basically house poor. What's it? House poor? Is that the word? Where they've
Yeah.
bought a property that they live in as a residential home, and now they have no money left over, that they are
Mm.
struggling to be able to
Sorry,
continue
I was about to comment.
continue existing.
Yeah.
What would you say to those kind of people? Like, does it make sense to buy the property that you're living in if it's you're going to end
Be
up
overstretched.
overstretched? Or
Yeah.
maybe would you tell them, oh, would you consider buying, maybe still getting onto the property ladder, but
Mm.
as an investment perspective, where you're renting it to someone who needs it,
Mm.
and go and live somewhere, say, a little bit cheaper, so that you still are on the property ladder, but
Mm.
um, just not living there yourself? I don't know. There's so many ways to,
Okay. So
yeah.
you're really lucky, ladies. You're really lucky because a lot of lenders don't really like that when you don't own your own property. First thing they want people to do is buy a property living. There are lenders, however, that I can go to that will be willing to accept a customer that doesn't own their own property, maybe even is renting and wants to start a portfolio. But there's not very many lenders. There's maybe 2 or 3 lenders out there in the whole market of all the lenders. But look, I totally agree with you. You should be able to do that, but it's just something to be thinking about. And maybe them to go for something a bit cheaper, because I do come across a lot of people where they want this all singing, dancing house. And I sometimes find I have to re-educate them because the UK is very unique market, yeah, in the sense that we have home ownership. A lot of Europe doesn't, it rents. And a lot of the guys that do come to me, they want like a 500 grand house to begin with, or a 300 or a 200. And then sometimes it is, I am very a realist, and I will basically go to them with the affordability and be like, this is what your price range is really. I know you want this, but this is what you get to. And then I always give them the example of myself, that we were in a terraced house first. Then we renovated that, did that up, sold that, because we were told to do that, but we should have kept it. There you go. That was a long time ago with a different broker, not me. So we sold it, and then we got some more money. We then got our semi, and then we again sold it because we listened to her. Sold that, and then got our forever home. Yeah, but so it's kind of like in the UK, it's a stepping stone.
Mm,
People don't like to know, you know, they're like, but I want that house. I know, but the income needs to stack up and it needs to be affordable, because no lender, what I would say to you girls is, no lender will want to repossess a property. They will do it if they have to, but you don't really see it in the press, homes being repossessed, because they will work, hand and foot and nail to get you, to make sure you're okay. But then obviously you have to ring them as well if you become, unable to pay your mortgage or whatever.
mm.
But yeah, so I
I
just
think that's
think,
great that you manage expectations. You
mm,
keep people, make it realistic.
yeah,
There is a confidence that you have to have, and do your investigating with what you can actually
mm,
go and proceed and do. But it's like,
yeah,
do the due diligence. Talk to Jess or talk to your mortgage broker and find out what it is you can do within the capacity that you're able to.
I've got a question, actually.
okay, go
I have a few friends now who are on the beginning of the journey to buy their first home, their first flat.
on.
They've saved
Okay,
up, and they've had mortgage brokers who've said to them, okay, this is how much you can borrow.
mm,
But they have come to me because I'm in property. I was like, well, talk to a mortgage broker. I'm not a mortgage broker, but they'll come to me and say, oh, what do you think of this property? I want to pay more than the asking price for it. And it's more
mm,
than the more like that what they can
yeah,
actually afford. Do you think
mm,
it personally, I think,
Why do they
why
want to
mm,
would
pay
you
more?
overstretch when wouldn't you want to pay a little bit less than, even
mm,
though your mortgage broker has told you you can pay up to this amount, but is it wise to pay that much just because you can get that lendability? Why don't you
mm.
try and find a property that you can pay less so you have more money in your pocket? I'd love to hear your thoughts.
Yeah. So do you mean in relation to, like, I'll give you my example. I was buying a property for 128. and this is one of the ones that completed, and the valuation came back at 115. So, but I own 3 houses around it. I'm not a monopoly, honestly. So I knew I had to buy that, because if I don't buy that, who's going to come? Yeah. I don't want anybody coming next door to me and causing me issues. So I bought it, but the landlord who was selling to me knew I wanted it, and he wouldn't drop the price. So I had to put 11 grand of my own money in, which was painful, but I'm okay, because obviously I've refinanced something to release the money to buy that. So I'm in a different situation. But if I was on the property ladder, trying to get on the property ladder and buy my first resi, and my brokers told me I can have 200, but really 150 would be better. To me, I would say to everybody, always go for 150. I know you want the 200, but why are you going to overstretch yourself? But what I would say is one thing. This is my knowledge of being a bank manager and being a broker. The first 6 months of a mortgage is always hard, even if it's a buy to let. I always find it. Like, I've got them 2 new buy to lets, and I'm already thinking work needs to happen, money needs to come in for that. But even if you're buying your resi, your first 6 months are the hardest, because you're then trying to manage your money and work out. Yeah, so a lot of the first time buyers out there, you need to just be sitting in the house for 6 months, drinking, eating soup, not going anywhere until you get into a rhythm. Then you'll get into a rhythm of your bills and your electric, your water, and then you'll be like, right, I've done 6 months, right, let's go for it. And I just think I do think as well, when I see a lot of customers, they take a lot of unsecured borrowing, like loans for cars, credit cards, and I just think that needs to be. It's too readily available, I feel, and I don't think people realise how that affects how much you can lend, and it really does. Like, for example, you might think, oh, I've only got a couple of grand on a credit card, but the lender doesn't see it like that. They'll see it as that £2,000 that you owe, and they see it as an entity, and they take a percentage, because it's a balance that you can kind of run up again, or do you know what I mean, or extend, so that they take. I think it's just they just deem credit cards as really bad because it's
Yeah.
open-ended debt.
So, I mean, I was going to start asking. Actually, this is following on from what you're saying. Common mistakes that people make when they're applying and how
Yeah,
to avoid them. So it's avoid credit
yeah.
card debt. Don't buy a
Well,
car.
just minimize it. Well, what I would say is, right, I've been dealing with loads of first time buyers this week, and I just said to him, my top tip is go on a diet. She went, what, go on a food diet? I went, go on a finance diet. And she went, what do you mean? And I went, don't spend anything. She goes, we were going to buy a van. I went, don't go it. Don't do
Yeah,
it.
yeah.
She's like, yeah, but my boyfriend's saying, why? Why can't I? And I says, right. I says, we're going to go for 230,000. That lender, if they can see, which they can see everything, some people have been shocked in the last few weeks when I've been doing their mortgages. They're like, how can they see it all? And I went, they can see everything. And if they can see that there's a car going to be like £300-400, that's going to come off your bottom line.
Yeah.
And then if you then don't outlay that information as well, it deems you as, oh, do I really want to lend to them if they're not telling me the truth? Do you know, we get into the realms of this kind of thing. And I just say to everyone, when you want to get in that black dress, or you want to go to that event and you want to look good, it's just the same on a mortgage. We are on a diet. We've got to be mindful of what we're putting on our credit cards,
Such a funny
loans.
We're having a
analogy.
cleanse.
We're having a, yeah. I said, you go to the gym, don't you? You work out. So we're working out your finances. And it literally is like that.
Yeah, yeah. No, we've been in a similar situation where we were remortgaging one of our properties, and we didn't realize we'd sold one of our old work business vans, and what was it? There was a loan on the electric.
Oh, it was so annoying.
But we didn't realize. So
we
the
didn't
lesson
know.
we learned was check your credit score at least every 6 months, because we forgot to,
Yeah.
and we didn't know
The battery was leased.
the battery was
and the new
leased.
owner didn't take over the lease of the battery.
So there was a little
that
mark on
affected our
affected our
lendability.
yeah.
It was like the
I
smallest
know.
thing. the smallest thing can really, they can see it,
They
even
can
if you
see
don't know about
everything.
it.
They can
But
see
we
everything.
didn't know. We
I
didn't know,
know.
and it wasn't our fault. Eventually, it was sorted out, and I think you rang the company, and they said that it wouldn't affect. They'd make sure it wouldn't affect the credit score, and it went all back to normal. But if you don't notice or you check
Yeah, I know.
your credit score regularly, then yeah,
No,
just
definitely. I've had another customer, and we were going to go for a buy-to-let mortgage, and she's an existing customer, so I didn't think to ask for the credit report because you always think if you've just done a mortgage a few months ago, it should be fine. And buy-to-let is a different entity altogether. It doesn't really go on the individual as a full. It does. It has it a little bit of a background check, but really you're looking at that property as well, and whether it's going to be able to service the loan with the rental income. So it was a really good deal. She was getting it. It was in Sunderland, really reasonably priced. I think she was going to get it for 90 grand or something. And it's going to be a HMO. I know they're a steal. Yeah, there's some really good areas. I'll have to tell you, ladies, where everyone's investing. And she was going to get it for 90 grand. It was going to be a 6-bed HMO. It needed a bit of work, which fine. Wasn't an Article 4 area. Tick, tick, tick. And then we went to apply, chose the rate. Lovely customer, really get on with her. Another lady, and went to apply, and it was a decline. And I rang her, and she was like, "Why?" And then I was like, "Get your credit report off. Let's just check it because I've got the one from 3 months ago, and that was fine." And there was nothing on the credit report, so she rang Equifax, and basically she'd been like, her identity had been cloned, but it was nothing on the credit report. But the bank could see something. There was something put there. So anyway, she's been sorting it out. So do you know?
Oh my
oh my
I
word.
goodness.
know. Yeah. So
And
you just got everyone needs to be really careful. I don't want to give everybody doom and gloom, but you just need to
Yeah.
be careful with your bank statements, with your documents, shred them properly, um, dispose of them because. But then also at debit card machines, like when you're putting your pin in, just be careful, cover them. Just got to be really careful now, and don't be opening your spam mail and.
yeah, no, but
Yeah.
even we've been in a situation as
I
well where
know.
we were at a supermarket and we just used our business card for in the what's it called then the pin where you put your pin in,
Oh
and
yeah.
then that was hacked because the computer system of the whole supermarket was hacked. So then we had money stolen.
Someone bought like £100 of Dominoes that same
No,
night.
don't.
We were like, that was not us.
I know. I know. Someone did it to me actually. I was shopping with my little girls, and no, we weren't shopping. We was at home, and I was getting them ready, and suddenly I got a pop up on my phone. Have you spent £300 at Asda online? I'm like, I don't go Asda
Oh,
online.
Asda.
I go in store. I wouldn't even go. I'm a bit afraid because I live really near an Asda, and I was like, what? £347 in Asda online? What would I even buy? And I said to my husband, what have I bought? And he went, well, you went to bed really early, so you haven't bought anything. And you've been with the girls getting them ready this morning. I was like, yeah, yeah. I was like, and then another thing came up, £150 you bought this in Asda online. And I was like, what is going on? And then suddenly my bank started ringing me. I was like, what is going on? And then I was like, I started sweating and I'm like, hello? And then she was like, oh, we've had these 2 transactions on your bank account. Have you done them? And I was like, no. And I went, yeah, but it's a new debit card. And she goes, yeah, where have you used it? And I named the 2 shops. And she goes, yeah, it's been cloned somewhere. I was like, but it's a new card. And she went, they've cloned it. I was like, oh my
Sorry.
God.
It's
Oh
crazy.
my God.
It's like this world is such a digital world now, which is wonderful in
I'm
so many ways.
because otherwise
But
we would never have found you.
yeah,
I
Like
know,
but
all funny, yeah.
at the same time, you need to be very vigilant about security online, which
Mm.
I think is something we personally want to explore a lot more because it's just vulnerable times. Like an innocent shop for a chocolate bar in a supermarket on your way back home could turn
Mm.
into an expense you didn't realize you were going to have.
£347 Asda what online? What would they have bought for £347 on Asda online?
Yeah.
I was
So
just like,
on that note, what strategies can people use, or like,
okay,
what are your tips to maximize their
okay.
mortgage options so they can
Look,
get the best deal?
I'm going to be controversial. I still invest in single buy-to-lets. It doesn't work for everybody at the moment. Where I invest, I'm cash flowing 600 with mortgage paid off and the insurance. So I'm still
That's
cash
amazing.
flowing
That's
at 600.
amazing.
I know. So, what I would say is buy-to-lets are good if you're starting out. What I would say to everybody is get a 2-bed, take it back to brick, see if you enjoy it. If you don't enjoy it, don't do it. The other actual really good strategy that a lot of my guys are doing are HMOs. They are tending to do the 6-bed, 6 ensuite or above because you can get a commercial valuation when it's 5-bed or more. And the reason why the commercial val happens is because it can't be changed back into a family home easily. So that is where the commercial val comes in. And why do you get a commercial val? So you can pull as much money out and go again. Yeah. So that's what a lot of my guys are doing in London. They're doing in London, Birmingham, Nottingham, Hull. They do it all over. And even in Leeds. And then the other strategy, what everyone's doing at the moment is commercial resi. So I've done 3 of these in the last couple of weeks. Yeah, and this is a really good, as long as you can like have a vision where you can have something for the uppers. So for example, where you're not just getting the shop rent, you're also getting the the resi
Multi.
side of things.
Yeah.
Yeah. So you could, and what you would do is you go to a lender and ask for a semi-commercial loan. Yeah. So and with a semi-commercial loan, you're getting a better rate than if you're getting a straight commercial loan.
So how would they
Mm.
be able to secure? What would you have to do to secure a deal like that?
Right. So when I first got involved in all this, I used to be like thinking, oh, it's really hard to get my head around it. And all you just need to remember is buy to lets buy to lets is 25% deposit. Um, if they want to buy land, it's 50% deposit. Yeah. If they want to buy a shop or commercial, semi-commercial, can be 35 to 40% deposit. It's all very, very similar. And just, yeah, and everyone needs to not worry too much. There's always a lender out there who will do something. So just contact me and I'll see if I can help. And
Yeah.
yeah, and the more colourful, the more I enjoy it.
Yeah. Jazz likes a
Yeah.
challenge.
Yeah, definitely.
So would you
Definitely.
just say that personally, from your own portfolio, are your buy to lets your favorite? Like the
Just because I know my market, so because like I get customers for mortgages, I get 3 or 4 inquiries for buy-to-lets because they know that's what I do in the area. Um, and it's just I know my market and I know what I'm doing, I know what I'm looking for. I have been trying to get back into the commercial space, but when I turn up to a viewing, they say it's a girl. A girl's here, and I'm not a girl. I'm a woman. So I haven't been successful on a couple of the ones I've gone for, even though I'm putting way above the asking price, like 100 grand more. But it is what it is. But now I'm learning as well that sometimes something might be on Rightmove commercial, but it might not actually. It might have already been sold.
Mm.
Because a lot of stuff does happen like that, and I'm getting to learn this as well. But yeah. But if they use me, you're not just getting a broker, you're getting the knowledge of a landlord, you're
Yes.
Yeah.
getting, and probably a friend for life as well, because, I get a lot of my guys, like one of my guys, he only used to do buy to lets. And he asked me this question, because what should I do, Jess? And I went, you need to do HMOs. So he's now doing his first HMO. He rang me the other day. We just had an offer through for one of his deals. We've grown his portfolio from 1 to now he's at 7.
Wow.
And we've literally done that in the space of 18 months.
That's
Yeah, I think
Um,
amazing.
that's the thing when you find your broker, you're
mm,
probably you want someone you can trust, and if you're planning on growing your portfolio, it's a long-term relationship, really.
yeah,
So yeah, that's really great that you're able
I
to
think
guide
as well,
everyone like
girls,
that.
I think as well, some brokers won't tell you this, but they do have a remit that they can go to. And sometimes they can only go to 5 or 12.
Mm,
Whereas I can literally go to 200. So if you want to really scale, you need to not just find a broker. A lot of the guys, what I was meeting in Cannes, they were like, yeah, I just use this broker for that. And then I'd go to that one. You're best off having your power team where if you've got a vision where I want to get to like 30 or 40 houses, you're best off sticking with the same broker, because when I like the guys that I work with on a weekly or daily basis that I'm growing their portfolios, they just ring me and they're like, Jess, I'm buying this now. I'm like, right, send me the new bank statement, send me the up-to-date pay slip if they're working, or tax calcs. Let's go for it. This is what you can lend. It's just, and it's like a quick phone call, a
Yeah.
package to pay straight away through.
Yeah. I mean, from our experience with our broker, it's just nice to have that kind of that free communication and
Yeah.
not feel like you have to jump through a lot of hoops because everything's already there. They can
Mhm.
look back at what you've already got. So just to wrap up this episode, we do like to ask our guests a question. So it's basically a fill the blank question, and it can be about absolutely anything. It can be about life, it can be about property, it could be about mortgages, business, motherhood, whatever you like. But the sentence basically is,
Honestly, the biggest lesson I've learnt is
To be resilient, and to not ever think that this one issue is going to like finish you, because it never does. And I always think a good long soak or a good hot shower and a nice sleep, I don't know, it gives me clarity, and then I'm like, right, let's tackle the next day. And I just think it's being resilient. Just be resilient. And you are probably, I don't know what's the word, where you can just show them what you are and just strive every day.
yeah,
just like be yourself.
I love
Mm.
that. I love that. Thank you so much, Jess.
Thank you, Jessie. It's been so nice. We could just talk forever because you're a very interesting person to talk
I
to.
don't feel it.
But we'll put Jess's contact details. Where's the best place for people to find you?
Okay, so they can find me on Instagram, it's Jessica Mortgages, Facebook. Then they can also find me on TikTok.
Really?
I know. And then I'm also on LinkedIn, but I am Jessica Rehal on LinkedIn. So, I am on all the platforms. So please contact away. I have got a link tree on my Instagram as well if you want to contact me through email.
Amazing. Great. We'll put those links down in the show notes or the description of this episode so you can reach out to Jess and ask her your questions directly. She's so open and lovely and
Oh,
honest.
bless you.
But yeah, thank you once again, Jess, for being on this episode. And I'm sure we'll catch up again sometime soon.
Speak soon, ladies. Bye. Bye,
Bye.
Reese. Bye, Rebecca. Bye.